What is up, everybody? Logan here again with another video, and you might be asking, where have I been for the last 2 weeks? So
I have, yes.
I've been moving across the country again, so got to see a lot of family for the holiday, and I'll go more in depth on everything in the next video. But today we're joined with Halcyon again. We're going to talk about a couple of trades that went really well in the Discord that he called in his call out channel, which is Palo Alto Networks, PANW, and then also we're going to look at gold or GLD. Now, we played credit spreads on these, and I'm excited for you to go into why you took these positions. But if you guys could leave a like on the video, I would really appreciate that. How have you been doing today, my man?
Doing well. Been a pretty chill day. I actually have a couple, well, only really one position on until today. So it's interesting going into the trading week with being very, very light. But as you know, cash is always a position. So yeah, we'll see how the rest of the week shapes up. All the banks announcing this week. Kind of light on positions, but this is two of the last three positions that we called out in my specific channel. So we'll walk through. So gold, PNW, and then JD is our current only position we have on right now in the Halcyon section. So why did we get into this, and what was the trigger to add a put credit spread on this? So here's the breakdown. So this is the 1 hour chart, and on this particular setup here, this is without my channels on this, and I use the 89 period moving average as just a kind of general sense of where the general trend of a stock is going. I think it works pretty well for most time frames. Fine for the 1 hour. So essentially, as long as it's kind of going up, I'm generally going to say I'm going to try to be more with the trend. And statistically speaking, I believe it's 80% of the time that a trending position tries to test breaking the trend, it fails. So if you're catching that, that's 8 out of 10 times you should maintain with the trend instead of trying to go against it. Okay, so it does not pay most of the time to go against the trend. Usually you get run over at some point, as I'm sure that has happened with a number of people at some point in their trading careers. They try to go against the trend and it usually doesn't work very well. Pretty painful trades usually. So we got in on, we called that out on July 2nd, which would have been somewhere around here in this time. We did a $1 put credit spread. I don't remember exactly the deltas were on that one, but I was playing price action and playing from the standard deviation channel. So I'm going to throw those back on to give you just a little more details as to what I was looking at and why we said, yeah, we got to get on this thing. Okay, so here's me adding the channels back into this, right? We're zooming back into that time frame. And so PANW here, Palo Alto, for the most part over the last 30 days, it does not break this one standard deviation move, which is what this white line is. So when we saw this drop in here, at the same time, it held it, which is a really bullish sign for me. And again, out of that trend side of things, if 8 out of 10 times we're going to hold the trend and we started moving back off of this. Again, this was I think this was July 1st. Yeah. So this would have been a Thursday. I think it was a Thursday because July 4th is on a Sunday. So yeah, this is a Thursday. So we saw it hold here, try to test it down, held it, and then move back up above on top of the moving averages here, which that's good to know. At the same time, though, all my main indicators I like to use for this were all lining up to keep going long on this. So we had my RSI, which we use a little bit differently. I'm using it more as a trend following versus a extreme overbought, oversold. But essentially, whenever I'm red here, this means that I want to be more likely to be more downward action going on. And when it crosses the 50 on the RSI reading, that's going to turn green, and I want to stay more long in those positions. And typically my best opportunities on whatever I'm looking to get into, whether it's going long or going short, is when I'm crossing back above the 50. At least that's what I've observed. And so, of course, we saw this hold the, step one, we saw it hold the trend, which means immediately I'm thinking going bullish. Step two is we saw it bounce up above the moving averages, plus the RSI crossed and went positive. Then the final swing for me was looking at, let me just highlight this, was my favorite good old squeeze, started building up right here. All right, so we see a 3-dot squeeze going, which is not the greatest. You usually want to see more like 5 to 7 of these. And typically something like this is a little bit better reflection of when it's going to really move, but whatever, worked out. So anyway, we see this go in line with this going positive, holding our trend, and to me, I said, there's a good chance we keep pushing up. And in the reality with the put credit spread, I just need to be right 1 out of the 5 ways the position can move.
Mm-hmm.
Right? I just need it to be right in the sense that it goes either sideways from that point forward, goes slightly down or slightly up or way up. Any of those 4 of those 5, I'm winning. The only time I'm losing if we go way down the next day or within that day to my expiration. So we put on actually a 2-week put credit spread of this one. I believe it was July 16th expiration.
Mm-hmm.
This was July 2nd when we threw that on. And then, of course, the next day, this is, let me get up here so we can see this. Right, next day, we are looking at, what is this? After the holiday. Yeah, so this is Tuesday the 6th. And so we open up, we were up 3 or 4% on this the next day, which of course pulled in basically all of the premium. I think it went from, we got it for $1 or so. Anywhere, I think people were getting rid from 90 cents to $1. And we got 85 to 90% of that premium collected. Exploded up. We collected literally all that premium, but we still had probably 10 days left in the trade. And we're like, we've collected 90% of the premium and there's more than 50% of the time left.
Mm-hmm.
I'm just going to take the win and walk away here, which it's going to work out fine. You could have held onto it and still collected all of that because this would have just chewed up more of it, but might as well free up your collateral and recycle that profit back into the account and find some more positions to go with. So that was PANW. And actually, if you look at some of the other time frames, which is some of the other shorter time frames, this is the exact same setups we're having on those too. And for me, anytime you get multi time frames set up with the exact same looking price action,
mm-hmm.
that is a really, really good signal to go with whatever that trend is. And if you notice, here's July 2nd on this middle time frame, where this is the 30-minute chart. And the same thing, a little squeeze building up where RSI is going positive again, and boom, we explode up. This is the 10-minute, which I view for my shortest time frames. And again, I think this is July 2nd here, same exact price action. We're right down to the white line here. We're building up. We have a little small squeeze that goes right here, and then we're positive on the RSI. So all those things were influencing me to say, let's get long on this thing. So we got I think I took 85 cents of credit out of that full $1 that was available. But it literally was we put it on near the end of the day on July 2nd and closed it within an hour after opening on July 6th. So I think we were in the trade for maybe an hour and a half total, which wasn't a bad deal.
That was not bad at all.
And then, so that was that one. The GLD was another one we put on right around the same time. This was a little bit different play. So actually, we need to look at the daily on this one because that was what I was driving this entire position off of. Mm-hmm. So let's grab the daily, open this up. So again, the longer the time frame, and typically daily is the most important one. Same exact reasoning why we did what we did on this is that again, the white line here, the 1 standard deviation move is pretty common for gold to hold that, move there, and then just hang out at that spot and then move off of it. Mm-hmm. And we've done this multiple times over the last 2 years. And so down here, we had fallen back into this range and we took so I think it was trading literally at 166 and some change, 166.50. And we took immediately a 166 put credit spread. So for those of you who are playing deltas all the time, you may be saying to yourself, why on earth would you have done basically a delta 50 there, put credit spread? We gave ourselves, I think it was 10 days in that trade.
Yeah.
But the thought was, there's a really strong possibility that we're going to stay above this white line, which is going to keep us above the 166, which means that we can get close to this. So I think we got a 50% ROI on that one because I think we got it for 35 cents credit. And the worst we could do is losing 65 on it. So from a put credit spread perspective, if you have a max loss, you're losing just basically twice what you got for it. Mm-hmm. But normally most people are going to be looking at, 7, 8, 9, 10 times, what they got for the credits, what they're going to lose on it. So I thought the risk reward was great. RSI was moving up again. We got tested one day for a hot second. It went down to 164 for 2 seconds there and then blasted back up. But all in all, it was a pretty painless trade. It's just following the standard deviation channels for me, which is kind of the cornerstone of what I'm doing with my trading. Usually is if I see them finding their supports and they get to it, then I'm going to take those trades. It's just about being patient and waiting for your trade to come to you.
And
So
those are both really good trades. And I think gold, I didn't fill the gold one, but I remember we were talking about it, and I did fill the Palo Alto one. I had a couple other positions on that week that I was managing too.
yeah, I think we had Google on before that trade as well, and that did the exact same thing. I mean,
Yeah.
it was just completely painless. Didn't even have to think twice about that, And most of the time, what I'm shooting for on those are minimum 10%, and most likely we're getting more like 15 to 20% ROI on those, because we're not playing the deltas in terms of probabilities that way. We're more looking at it from purely price action and where support is, and then putting them on and getting a little bit closer to the money, because statistically, yeah, if you look at it in isolation out of context and you just say, well, you're getting a delta 30 or a delta 20, well, there's a 60 or 70 or 80% chance that's that maybe 20 or 30% chance you're going to get tested. And some people that's not acceptable, but for me, when I put these on, it's because we have a really good reason. And plus, on top of that, we have support sitting there where I don't think we should break that, and thus I'm willing to get closer. So those are our last two plays. I think for the month of June we hit in my channel. I want to say we hit 20 out of 22 plays in that. So it was a good month for us.
We should have hit another one, but it freaked out on us, the UNH trade.
Well, we would have hit it if I wasn't even looking. I broke my own rule, which is don't look at the put credit spreads till after 10:30.
Yeah.
And I think I looked at 20 for some reason. I don't know what I was doing. Somebody called it out, and it was I gave it. I gave it a short leash to work with, and sure enough, it pushed it for a hot second. And I was like, oh, we'll fine with closing it out for a small loss here. And then literally within a few minutes, it all rocketed back up to where it was supposed to.
Yeah.
And had I never looked, I would never have known. And I broke my rules. So don't break your rules. Stick with them. I have the rule for a reason, because that first hour is so manipulated, in my opinion. It's emotionally a just complete shitstorm of manipulating you. It's what it is. And that's what it does. And more often than not, it screws you over than helps you out. So
especially the first 15 minutes, they're just
man, that is not. Yeah, most people would be better off just don't even look at that point in time.
Yep.
Consider the market opening at 9:45, not really 9:30. So there you go, homie.
Awesome. Well, I appreciate you coming on again, and I'm glad that we're finally back to uploading, and I can't wait to have you back on for some more videos as well. I'm just pumped. I think everything's been doing great with the trades, and it's been a great month this past month, and this one's starting off pretty well as well. So
Agreed. Totally agree, man.
I really
glad to have you uploading again.
Yeah. You just got some stuff sometimes. Everybody else got the week off, so
I know you're traveling all over the place.
Off for YouTube too, and it's helping me too because I'm not burning out. Like I wasn't burning out uploading all the time, but when you're watching the charts all day and trading, and of course I'm not like actively scalping or anything, but just managing positions and stuff. Yeah, it's hard to then want to do YouTube and edit it and film and the whole nine. So.
Oh, of course. Yeah. That is it's a time, it's time for that, and it takes up brain capital. That's for sure.
Yeah, it does. Well, I appreciate everything, and I'm excited to have you back on soon, man.
All right, homie. We'll see you.
All right. See ya.